Prices are up, discounts are down, and closed sales are way up.
If you've been wondering whether Manhattan real estate is back, Q2 2025 just gave us a pretty clear answer. Welcome back to the show. I'm Jonathan Conlon, and I'm here with my business partner of 19 years.
As of September 1st, yes, 19
Mr.
years.
John Gastaska.
Thank you, Jonathan. It's nice to be here.
And
it's Real Talk NYC Real Estate with John and Jonathan.
Yeah, there you go.
We're going to say the whole podcast name because we have not been on since last
It's been some time. We're not going to talk about when
quarter.
we're shooting this. We've already given
Exactly,
given
but we are back, and we are going to tell our audience we are back, and we are committed to Real Talk because this is where it all started. It is all where it
Not
started.
really.
Yes, it was.
No,
it was
we started this 5 years ago.
On FaceTime.
Yeah,
FaceTime we started.
No,
Facebook.
Oh, my God.
Facebook. Okay, right. So let's talk. Dive right back in. It's great. We're talking about the spring numbers, right?
Yeah, well,
Okay,
spring
good.
numbers because of the 90-day contract period. So we're looking at Q2.
But we're looking back on the closed sales.
Yeah, because of our 90-day transaction period, that tells us what happened in the spring.
Exactly.
We are, and as we mentioned in the beginning, in the intro hook, I think they call it in technical terms, we saw very strong numbers in Q2.
Yeah.
So, which we'll get into. So there's a number of different factors for that because of that. But first and foremost is mortgage interest rates.
Correct. So mortgage interest rates for the second quarter were hovered between 6.4 and 6.8%, which is higher than pre-2022 rates. However, they've stabilized, and we didn't see the roller coaster of rates that we saw in 2023.
Yeah,
right?
that stabilization matters. That's what we always say. The number one thing buyers don't want to buy and markets that sellers don't want to sell in is when there's a lot of uncertainty. And those mortgage interest rates, although over half of our deals are cash deals, it still affects our market.
Definitely.
People still feel uneasy about it, even if they're not taking a 80% loan to value. So that stabilization, which 23 was sort of still figuring out, 24 it sort of settled out, but it takes time for people to just accept the new reality that interest rates are not at 3% anymore.
Right. And what we've seen in 2025, particularly in the second quarter, is the market has definitely stabilized, and buyers are in this marketplace, which the numbers show, buying the real estate at the mortgage rates that are down from, let's say, 8%, right? They topped out around 8 or a little over 8, and now they're down in the 6.
Yeah, of course, depending on the product,
right.
But it's fluctuating right in the 6s for at least a few quarters here.
And
so
as a side note, historically, when I started selling real estate, they were coming off 9% down into 8%. And when you hit 7%, that was really, really, really good.
Yeah. 6%, brokers were running through the streets with their hair on fire saying, buy real estate or you're an idiot,
Yes.
you know?
My first house, I think, was at this, well, it was a LIBOR, but the second house was at like in the high 5s to 6. And so now we're kind of in decent rates.
Yeah. I mean, historically,
I think
still
we got
very
all
low
got
rates.
really stuck and really
We got
complacent
spoiled.
at spoiled is right. 2.2 to 3% interest rates. We're never going to see those again.
Yeah.
Maybe not in my lifetime. Maybe yours. Okay, let's move on.
We won't dwell on that.
Let's move on.
So the second point we always talk about is closed sales. So we referenced already. It was a very strong quarter. Q2 ended with a little over 3,000 closings. So that's up 18% from Q1 and 16.6% over Q2 of last year.
Right, and it was the strongest quarter since Q2 of 2022, which showed over 3,800 closings. So we're seeing definitely a much more robust market than obviously 2023 and 2024 even, and so that's
those Q2 closings were, if we look at Q1 of 22, was the last quarter we had those very, very low interest rates. So the market was frenetic at that point, coming out of COVID 21 all the way through Q1 of 22, and then all those closings happening in the second quarter of 22. So
let's talk about inventory. We saw inventory climb in the second quarter of 2025 to just under 8,300 listings, and that's up 12% from quarter one and about 7.5% from last year. And it's not unusual that we see inventory numbers climb in the spring because the spring is the most robust market, and we have more people putting their apartments on the market. What's important is to look at, obviously, the absorption rate, which we'll talk about in a minute.
Yeah.
But do you have anything to add? But
Well,
it's a healthy inventory. It's not a low inventory, and it's not an overly...
Yeah, the spring's always our busiest market. It's when the bigger apartments tend to come on the market because people think of, okay, well, especially if they have children in school, they want to put it on in the spring. So hopefully they sell by the beginning of summer, meaning get it in contract, and then, or the end of spring, and then close it before the next school year. They find their next place or move to their next place, wherever that may be. And make the move during the summer when they don't have to deal with kids in school, et cetera. So, so very typical of the spring season. It's always our busiest when it comes to inventory. You hinted at absorption rate. So absorption rate is the number of months of inventory at the current levels of activity, contract signs that are happening. So with sales volume climbing, we actually saw the months of supply drop to 8.2, which is down from 8.7 from Q1, the end of Q1. We always look at the last day of the month.
And even though last year at, I guess, second quarter was at around 7.4 months of inventory, on average, which is actually low, on average between 8,000 and 9,000 units is normal and what we would consider a balanced market.
Yeah, so it's a very healthy, steady
more
market,
options.
which is, sometimes boots on the ground. It doesn't feel like that. For the individual agents, it kind of depends on who you talk to because we are all, we're all products of our impression of the market is just a product of our client base and what their motivations are. I don't care how busy of a real estate agent you are, you're still only handling a very small fraction of the market. So, so it's not overheated, but certainly not a frozen market.
Right. So let's talk about listing discounts. So we actually saw the listing discount, the percentage of discount shrink to 5.8% last quarter. And that is from the last asking price of the apartment. So that's telling us what?
Yeah, so last asking price to the contract price. We've seen that shrink go down over the last couple of quarters. Which makes this the tightest market actually we've seen in that negotiability factor since back in early 22.
Right. So that means that sellers are pretty much pricing their apartments to the marketplace. We still have sellers who want to be ambitious in their pricing, but overall, I think the overall arc, which is indicative of the numbers of sales that are being done, is that sellers are pricing more to the marketplace,
or at least getting their
accurately.
prices to where
market.
it should be.
Correct.
So those eyes are starting to align a little bit between buyers and sellers more, whether that's from an apartment that's been on the market a long time, which there's still plenty of apartments that are sitting out there, the ones that we always talk about that need a lot of work,
Right.
that maybe are in a very sort of off the beaten path, so to speak, neighborhood, location. So there are still those sitting out there, but the ones that are actually transacting, which is what the quarterly always looks like, is sold and closed because that's when the figures are sort of locked in. Those buyers' eyes and sellers' eyes are coming into focus a little bit, or a little bit more in line than what we've seen.
Right.
Let's zoom out. Let's recap what we talked about. Since last year, Q2 of last year, we have sales that are up 16.6%. So closed sales up 16.6%, while negotiability went from 7.3% down to 5.8%.
And between the quarters, we saw closed sales actually up 19%. And then the supply numbers, we saw supply getting tighter from 8.7 months in first quarter to 8.2 months. So
all good signs of a strong, nice, healthy market. Again, even though sometimes it doesn't feel like that to the people?
I think that it feels like a very healthy market to me. I sometimes feel like it's a much more seller market, and sometimes more buyer market, and this is more balanced market. That's my take on this.
Yeah, and it's not just seasonal. This is a steady, not necessarily growth, but moving to a nice, steady, even-keeled market.
So I think that the audience really wants to know what to expect in Q3.
Well, that's the big question.
Mm-hmm. I don't know. I think you should go first. What are we going to see?
So when we look at the next quarterly statistics, we're really talking about, it includes a couple of the summer months. So that we'll see a pullback. Typically, we'll see numbers pull back a little bit because of that seasonality. But if the rates remain stable, if inventory remains there, which again, we're shooting this podcast late, but we've seen that remain steady. I think it's going to be a continuation of what we've had.
Correct.
There is one thing that is encroaching upon us, which is the mayoral race in New York City. There is an emotional response right now to how I would coin it anyways. You can speak for yourself, but with Zoran Mamdani winning the Democratic primary in June or whatever it was, there is some people feeling, that's going to have a big negative effect on our market, or just people having faith in our market. So time will tell. My argument against that is look at what our city's gone through, and we've got the longevity, both being in this market, in this industry for over 2 decades, and seeing numbers of things that we thought were going to have some major crazy impact on our market when we were going through it, or at the beginning of it, or that was the general feeling on the street, so to speak. And the storm was weathered, and
Yes.
Most recent being the interest rates almost essentially doubling from what was typical back in pre-March of 22. And yes, did it have an effect? Was there a pullback in our market? Yes, but we also just came out of COVID, and there was the freneticness in the market catching up from that pent-up demand from COVID. And then the market sort of dipped, which happens after a big boom. It dipped a bit. That coincided with the mortgage interest rates doubling very quickly. So that was uncertainty in our market, and now it's stabilizing. So could there be a little bit of opportunity there for people that perhaps sellers putting in their apartments on the market feeling like, oh, we got to get out of the city because we don't agree with this, that, or the other? Sure, there could be little nuggets of opportunity, but it's really going to be hard to figure out where those pockets of opportunity are. It's going to be very situational, because what if the apartment doesn't work for you? Well, then who cares whether the seller's willing to take a low number on it? Right. So you still need to align your desire to buy that apartment.
Do you want my point of view? I have a definite point of view.
Oh, okay. So now you go.
Okay, great. Yeah, I definitely do, because people, no matter who's in office, no matter what happens in the economy, people want to be in New York City, or people are moving out of New York City. Every single day, we have people transacting in New York City, and people want good apartments. People need homes. They are either dying, they're divorcing, they're having children, they're being transferred into our city, out of our city. So our job is, we look at what we're seeing now is that there has been some, not I want to say flight to safety, but a little bit that the prime areas of Manhattan are seeing a lot of attention, which they always do. But Park Avenue, Fifth Avenue, where we sell, Central Park West, but also in Greenwich Village will always remain strong. Tribeca, Soho, those areas are all really, really strong markets. I do think that we're looking at in the third quarter, our international buyers coming in. Is the dollar stabilizing? We've talked about interest rates on the stabilized, and I think the numbers are telling us, and we're feeling it, boots on the ground, that it is a stable market.
Yeah,
and it's a healthy real estate market, and I do think, and you labeled it in the beginning, that apartments which need renovation are taking the longest to sell. They are, not in every market, but in this market and what we've seen, COVID has really taken a number on Manhattan, and we're now starting to see Manhattan emerging. And there's only one Manhattan, so.
Well, and layered on top of that, which we talked about in our last podcast, was the amount of uncertainty in our world in general right now is very high. We've got a couple wars going on. We've got trade
inflation.
wars. We've got inflation. We've got jobs numbers downs, depending on what you believe, et cetera. So to see the numbers that we got that transpired in Q2 is a testament to everything that you said.
Exactly.
Now, our business is mainly primary users, and so that is the market that our client base typically are people that live here, work here, raising their children here, retiring here, et cetera. And there's always more commitment, let's say, from that stock of client. The pullback that you'll see is people that were thinking, oh, maybe we should buy a secondary residence in New York City.
Right.
Okay, or people maybe, which is exactly what we saw in COVID times, is that mass exodus that people were referencing at the time. Who was that? It was either renters moving out of the city because they could, frankly, and who wants to live in, tic-tac vertical living during the COVID times, not knowing at the time when is it going to sort of finalize and get back to some semblance of normalcy, but also pushing along people's timelines. So people that were perhaps had kids that were or about to have kids or had kids that they wanted to move out of the city anyways in the next couple of years as the kids went to school, let's just say as an example. Well, it just pushed up their timeline. So are there going to be pockets, and that goes back to the possibility of little pockets of opportunity, but it's very specific to the person, to the buyer, to the seller, as to, because you're going to have buyers out there that are looking to lowball everybody because they think the end of the world is coming with, Mamdani if he wins.
Right.
So it's very dependent. It's not like a easy black and white, here's the answer.
And before we wrap up here, you brought up a very interesting point. Our podcast has really focused in on the sales market in New York City, but there is an unbelievably robust rental market that we have seen heights that we have never seen before in terms of the rental market. So you have tenants who are paying really significant numbers for small apartments, and
highest rents ever.
The highest rents ever. And second of all, we do have huge money, commercial money coming into Manhattan that has to be looked at. Google, Amazon, we have big players, Facebook. So we have big players investing in Manhattan commercial real estate. We've had challenge with the commercial real estate market in Manhattan, but we have more and more people going back to work, more workers coming into Manhattan needing, whether they're buying an apartment or renting an apartment. So I think the long-term forecast for New York City real estate market is I am a big bull when it comes to New York City real estate. I always have and I always will be.
Well, and it's
go Manhattan, go New York,
it's proven
go
very
Brooklyn,
much
go
the
Queens,
case
go Bronx.
Through 9/11, through the housing crisis of 2008.
Oh shit!
Through
we've seen it all. COVID,
through the interest rates doubling.
Quack.
I do think that if there's, we always say, last to fall,
everybody gets
first
a quack.
to recover. It's there's real credence to this is a city that people want to remain in. People want to take advantage of everything that it offers, and our families included.
They even want to take a rickshaw. What do they call that? Not rickshaw, but the bicyclist. We did that down Fifth Avenue. Eric and I did last week. I had not done that in a long time.
The city bikes?
No. The guy driving the bike down Fifth Avenue. They got to tune into that one.
Yes, they are.
All right. Listen, it's great. I love you. I'm so glad you're back. It's his birthday. It's his birthday coming up. Happy birthday.
It's your birthday coming up.
we're not going to talk about that.
Let's talk about
And
how
so
old
we
you are.
promised the audience we are going to be much more in tune with Real Talk.
We'll be more
Real Talk
timely
Real
next
Estate with
time,
John
I
and Jonathan,
promise.
right?
Yes,
So thanks
we
for
have a
tuning
lot
in.
of moving parts. Thank you, everybody, for tuning in.
Be healthy, safe, and most of all,
Remain in gratitude. We
See
will
you
talk
next
to you
time.
soon.